We good? All right, everybody. Halftime's over. Time to get back to your seats. Well, that was quick, boy. People really settled down. So we're excited for another sports panel at this conference. The trio that we had last year was so great that we decided to run it back. Unfortunately, Sal Galeotto, who was an icon in this industry, a dear friend, ended up in the hospital last night. I'm told he's fine, but I'm sure his doctors don't want us to get him all riled up on this panel. So he's going to be out. So it's we're going to have to make like the New York Knicks and play hurt, next man up. And I can't imagine a better duo.
Just call me Deuce.
There you go. So we'll call you Mike Vino Levine, who founded and co-heads the sports business for creative our agency, arts agency, sorry, CAA, and was a college athlete himself, led the Cornell lacrosse team, and was an academic Ivy All-American, amongst other things.
This is really nice. I didn't expect that kind of
there you go.
line in the bio, so thank you.
And then we've got Mike Ozanian, who was a sports journalist, or a business journalist who became a sports journalist and founded Forbes' sports business, which includes the annual team value rankings, which get widely cited. You don't have a cool nickname though, do you? Can we call you Oz?
You can,
Okay.
yeah, absolutely.
All right. Well, we'll just call you Mike and Vino for here. No Mike and Ike. So anyway, let's jump right in. A lot of news, obviously. This is a media conference. Media rights are the lifeblood for team values. And there's a widening dichotomy between what's happening locally and nationally. Obviously, you've got the regional sports networks under some pressure, including Diamond Sports in bankruptcy. And then you've got the national rights going for records. Obviously headlines today, front page of the Wall Street Journal, that the NBA is going to increase their average annual value of broadcast rights by 2.5 times. So let's try to make sense of that. Are we at peak media? What's the future for RSNs?
Oh, well, that's two different questions.
Sure.
I think the answer to the first one is no. I really believe that as live sports continues to be the only piece of must-see programming in real time, that the haves, and in that case, I mean the leagues that are must-see television at this point, really starts and stops with the NFL, then the NBA, MLB, and NHL to a lesser degree, and maybe some also rans, but those guys are in a position of great strength on a broad level because we all want to watch these games. We want to watch them in real time. And I think the distributors need to pay top dollar to either get themselves into the game or to maintain their place in the ecosystem.
I brought visual aids this year, and you can see this is one of my favorite slides. These are the top 100 programs in prime time last year. Up in the upper stage right is the Super Bowl. That's number one, obviously. The NFL is 55 of the top 100 programs. Actually, sorry, sports are 55 of the top 100. Most of those are the NFL. I think we might have some CBS affiliates in the room, and actually 60 of those programs appear on the Tiffany network, including the NFL, obviously. Mike, you want to add anything to that, particularly on what's going on the RSNs?
Yeah, I think in general, going to that chart, I think you have the NFL, and then there's everything else. And what you said about the NBA and the reported 250% increase in their rights deal, what's most fascinating about that is that their TV ratings have not been that great. So it's even in the face of that. I think on the RSN level, you almost have to go by league. So, okay, there's really no impact with the NFL because their rights are almost all national. I think what you're probably going to see to a certain extent is in the NBA, you're going to see a reach where the local rights are going to go more towards linear, free over-the-air broadcast. It's going to be almost seen as a way of capturing audience as opposed to making a big pile of money. Um, I think with Major League Baseball, it's very public. There's a battle. Rob Manfred wants to take control of the local rights. Uh, we'll have to see how that pans out. I think there's also a huge difference. Diamond's problem, in my view, was largely not because of the ratings of its RSNs, but because the deal structure involved so much debt. I think that was the main problem. There are a lot of healthy RSNs out there. But I think at the end of the day, for the NHL and MLB, what you're more likely to see is just like 20 years ago, moving forward, you saw a bundling on cable. You're going to see the rebundling, but with streaming.
Yeah, and I think what you're seeing from what you're hearing from commissioners behind closed doors is to try to bridge the gap between now, when these hits in the short term of lost rights fees are hitting the bottom line, and then to a place where we believe we can get back most of that through a direct to consumer model. And I think in Rob Manfred's case, he's got a situation where ESPN can opt out of its baseball package and renegotiate a deal. And I think Rob would like to create new assets, taking some of the local assets, packaging them nationally, creating a baseball night of the week where games across the country start at the same time. And they're playing around with different nights and different models. You've seen what the NFL has, NBC and the NFL have done with Sunday Night Football, adding to the, storied Monday Night Football franchise. And I think that Rob would love to have some appointment type television like that, where he can control matchups and really, put Dodgers, Yankees, or Red Sox, Yankees, or Cubs, White Sox on a national stage on a Friday night, for example.
Well, certainly one of the very positive developments for media rights has been the involvement of basically just about every big tech company. Even Netflix now has changed their strategy a bit to include live entertainment. They've started with WWE, and they're moving to other stuff. So, it does highlight, however, a bit of a conflict between maximizing reach and maximizing dollars, which some of our broadcast presenters mentioned today. How do you kind of square those things?
I think part of it is you give free content on linear, on over-the-air broadcasting to a certain degree, but I think it's just going to evolve over time, where hopefully you make more than enough money on your national deal, as was the case with the NBA, and on to more than make up for what you lose on the local level. And I think they will. One of the interesting things is if you go back to, remember when CBS gave up the NFL in the early 90s, and then they came back with the AFC. If you go back, these new companies like Netflix, Google, Amazon, they have two things that those networks didn't have back then. They have a lot more cash flow. Like when CBS came back in, they had negative cash flow, and they still came in and paid back. These tech companies have huge cash flow, and then also they have other ways to get scale. So with Amazon Prime, that's where they want to get you. So there's another way for them to make money rather than just the service. Same thing with Netflix.
Look, I think, Chris, what that gets to, and Mike is right, is this moment when we have two different sets of constituents bidding for a very small amount of supply here of rights that are sort of premium killer live sports rights. And you have the new tech, Amazon, Google, Netflix, Apple bidding for their place in the ecosystem. And then you have the old players, CBS, Fox, NBC, trying to hold on to their place in the ecosystem. So it's a positive development for the rights holders.
Right. And so I think you touched on a key element to why we've seen team values escalate, and that's limited supply of teams in this case. It doesn't seem that owners or prospective owners care very much about what's happening with media rights, or at least with local media rights. They're still bidding up.
They care.
Well,
they care, but I think they're bullish the way I am broadly, and I think that the scarcity of the asset base is definitely driving demand for sure.
Right. So again, another visual aid here. Mike Ozanian, I took your Forbes data for the last 10 years, your aggregation of team values by league, put them all together, it looks like the private market value of the big four has compounded about 16% over the last 10 years. That's versus 13% for the S&P, by the way, to about just shy of $400 billion, which is about the same size as Procter & Gamble, which actually, when you think about it, actually seems a little small, given the importance of sports in our country and globally. But the average revenue multiple has gone from 4.5 to 8.5. Any other besides
Well,
just
think of
shorts?
what you got. Michael touched on it. You've
Yep.
got basically scarcity, which, let's be frank, is basically a monopoly.
Yep.
You've got maybe the only form of content that people want live and in real time, and want to be able to share that content with their huge fandom over time. And another thing from that is you've got how many businesses do you have, in many cases, the public fawning over ways the politicians to give you hundreds of millions of dollars for capital investment in your stadium. And then lastly, the big thing I think that's driven the increase in multiples, where now you're seeing the NHL catch up, is salary caps. When we were first doing this 15, 20 years ago.
Vino grimaced when you said that, by the way.
No, I thought for sure he was going to say the new presence of private equity and institutional capital as LPs. So I think you're right, Mike.
Yeah.
Honestly, all of those factors are driving these prices, and I actually think that the number of the big four, which are the most mature and largest, sales price numbers, would be goosed up if you included MLS or NWSL or any of these other sort of rising, growing concerns where you have owners wanting to get into the sports landscape from an entry point, and it's just a lower cost entry, and those numbers are getting what I think are really frothy.
Right. And you both mentioned no shortage of buyers here. And I put up this slide, which shows the current ownership restrictions, and basically private equity, even sovereigns allowed in 3 of the big 4. The NFL still remains the most exclusive club on the planet.
But
Is that going to change?
That club will open up in the next 3 to 6 months. I mean, I think it's been reported that it was discussed at the most recent round of owners meetings, and I don't think there's anyone in our business who doesn't believe that's going to happen. It's just a question of when it gets approved and in what form.
Yeah. So you've got Qatar, which owns a portion of the Washington franchises, the Caps. And I guess, are we going to see more sovereign participation in the big 4?
Yes, I think it'll lag private equity investment. I think, like, especially with the NFL, I think the first 3 of those X's, going from top to bottom, like Michael said, will be gone within the next 6 months to a year. The 4th one, I'm not really sure. I know for a fact that there's huge demand on the sovereign side. But, they're looking at, these leagues are looking at what's happened to soccer, let's say, the top European teams, and like PSG, Paris Saint-Germain, what they've taken in sovereign money. Manchester City, for example. And I think you mentioned Washington sports.
Yep.
I think part of that trend, another piece of that puzzle, is going to be an increase in the number of owners that want to use sports as a platform for multiple teams and multiple numbers of sports. And
you talk about Monumental Sports, which owns the Wizards.
Monumental
Yeah.
Sports, Maple Leaf Sports
Yep.
Entertainment.
Harris Blitzer, Fenway Sports Group, Smith
Madison Square
Entertainment
Garden
Group,
Sports.
Madison
Yep.
Square Garden. There we go.
Yeah, absolutely.
All right.
The original conglomerate.
Yeah, well, so sort of new topic for this year, but one certainly top of mind. And I'll make a talk my book here for anybody who's a baseball fan. Make a trip to Atlanta, visit the Battery. It's a great place to spend a day and watch a game. That is the multi-use real estate development that surrounds Truist Park. Lots of teams want to copy this. Even Camden Yards has been discussed as maybe not viable because there's no opportunity to expand around it. Is this the future? Is this a new source of revenue and value for sports franchises?
Yes, it's the present and the future. I mean, I think that Liberty did a great job in the Battery. I think we, go back to Los Angeles and look at the way Anschutz Entertainment Group developed the LA Live footprint, which, you know, really reshaped downtown Los Angeles around what was the Staples Center. Now it's Crypto.com Arena. But I think you're going to see more and more of that. You may have read about the NHL's move from Arizona and Phoenix to Salt Lake City, Utah, with Ryan Smith and the Smith Entertainment Group, who owns the Utah Jazz, made a bid, had an option to move the team out of the city, received $900 million worth of municipal funding from the mayor of Salt Lake and the governor of Utah to keep the Jazz and their new hockey team downtown, and gave them 3 city blocks to build out a battery-like mixed-use facility that's going to really create some vivacious, you know, growth and development in the middle of Salt Lake City, which is really important.
Yeah, I mean, they would all love to do it, but it's going to be, I think, determined a lot by geography and politics. So, you know, to Michael's point about Utah, well, let's not forget why the Coyotes originally, you know, ended up in Arizona. It was basically part of a real estate project. They were going to build a mall, they're going to do all this stuff, you know, and, you know, it never happened for various reasons. So, you know, the team went into bankruptcy, you know, and where are, you know, the Royals would love a new stadium and would love to build that out, you know, but the taxpayers there have said no. Meanwhile, you know, you mentioned the Orioles, they may not get something like Truist Park in the Battery, but, you know, that was a pretty good deal by David Rubenstein. He got, when he signed on to buy that team, it was part of the lease agreement. It had been pre-approved. The taxpayers were going to fund, I don't know, a minimum of $400 or $500 million. So, you know, that going to what you were saying about media rights, as in certain instances, if local media rights, you know, slow down or flatten out, the stadium becomes a much more important part of your economic model. So teams that do get to do the real estate side, you know, whether it be Utah or, for instance, you know, you're talking about Atlanta, they'll have a huge advantage over those teams that won't. It'll be, I think, right above, you know, now that you have a cap, and there's in hockey, for instance, and baseball's probably moving that way, and you have a cap in the NBA, it's going to be right there with state income taxes in terms of a means of attracting players too. It's a big factor.
Right. Vino grimaced again every time you say cap.
Look, I think it's worth talking about. I mean, as a lifetime baseball fan, I'm concerned about the state of baseball. I am one of the few suckers that's still a Yankees season ticket holder, and I haven't been to a game. And so it's an issue that our children, my children, 12 and 16-year-old boys who are avid Yankee fans, have never sat on the couch in our house and at 7:05 turn the TV on to tune into a Yankees baseball game from beginning to end, the way I begged to do every single night in the late 70s when I just wanted to stay up for one more half inning to watch the game. They're happy to go. They're happy to turn on Instagram in the morning or TikTok and see the highlights from the game the night before so they can talk to their friends. But we have a generational loss of avid fandom in baseball. And I think that you're going to need to see some changes like we've already seen with regards to the rules that were changed last year very successfully, have shortened the games and feeding this lower attention span audience. And I think that what we will likely see in 2026, when there's a looming work stoppage in baseball, is a salary cap and a floor that will enable baseball's economics to be sort of more managed and in control.
More parity as in the NFL. Yeah. One thing that baseball is good for better or for worse, is sports betting. And it's been 6 years since the Supreme Court opened the doors to sports betting. We heard a little bit about that today. What inning do you think we're in terms of revenue realization from sports betting by the leagues and the teams? And, you know, at the same time, we've obviously had some scandals, a couple of them in baseball, as recently as this week. Does that endanger this revenue stream, or does it tarnish the brands?
You know, a couple of years ago, I don't think it was last year, I think it was the year before, one of the questions you asked, Chris, was, what do I think, what poses the biggest downside to sports? I feel it's sports betting. I don't think people talk about it enough. I don't think it's built into anybody's economic model. Michael was talking about the fandom and when we were younger, how, you know, I mean, I did the same thing, the Yankee games on PIX,
Yep.
and, you know, come on, Ma, you know, I don't have any homework. I want to watch the whole game and that whole thing. I think, and the trust of the game is, the credibility of the game is so important. And I, I think the risks of sports gambling, whether it be with the players, umpires, whatever, is is big. Because once you lose that, I think it's a big problem. And how many people just recently did they? And I'm sorry, I'm not a big believer that Sohei Ohtani knew nothing about the $40 million that left his bank account.
All right,
I'm not going to touch that.
I'm going to have to jump in since Shohei Ohtani is a client of ours.
Oh.
And I had a pretty good seat to that entire process. And I actually do believe, and everyone in our ecosystem believes, that he was swindled. Was he sloppy? Was he not paying attention? Yes, he was. He was. And he doesn't pay attention. He lives a Spartan existence. He lives in a very modest bedroom and doesn't really pay attention to money, which is part of the reason that he deferred the $700 million that he's been guaranteed from the Dodgers a 10 years later from now. But Ipe, who was the translator, was everything. He was his best friend. He was the person who introduced us to Shohei. He was the gatekeeper in every regard. And, you know, our team doesn't speak the type of Japanese that they should have. And that was a mistake. We had some people within the Dodgers that didn't have the type of Japanese that they should have. And honestly, had Stan Kasten not called a team meeting in the locker room before they flew home from Korea to explain to the team that this scandal was going to come out in the news, and Shohei hadn't heard a few words that he understood in the locker room saying, what do you mean covering bets for a friend? Gambling? What are you talking about? Then this ball of string would never have gotten pulled on. And, you know, the story that Shohei's interpreter, Ipe, gave the ESPN and gave to Reuters or Bloomberg would have been the story that came out. And so it's a terrible episode. I don't disagree with Mike's take on the dangers of sports betting, but I do think it's a double-edged sword. And I'm not a sports gambler. I had an uncle who had a lot of problems in the 70s and 80s that I remember my family trying to bail him out of. So I've been fearful of it since I was a kid. But I will tell you, it's pretty compelling to sit there and watch, you know, the Super Bowl or a playoff game and have, you know, little real-time wagers with my friends on who's going to have the next touchdown. Is it going to be a run or a pass? Is there going to be a 12-yard run or less? And, you know, you can get carried away pretty quickly. And for that reason, the engagement opportunity for fans who have sort of given in to just watching highlights, it's a way to draw people in the way fantasy sports was 15, 20 years ago.
Well, we could have a whole conference on just this topic, but we do have a lot to get to. So let's just switch gears to winning isn't everything. It's the only thing, which is misattributed to Vince Lombardi. It was actually coined by UCLA football coach Red Sanders. Is there a correlation, have you found in your work, Mike, between winning and franchise values? Are the Knicks worth more, and Knicks and Rangers worth more, given their recent success because of the winning?
No, in certain markets, it's not. I mean, the Knicks are sort of encumbered by, you know this better than anybody.
Yeah.
You know, they have a lease agreement with Madison Square Garden Entertainment, so they're only going to get a percentage. They can raise ticket prices as each team's advance in the playoffs. Unfortunately, that's been far too rare in recent years. You do see it more in some of the lower revenue cities and some of the low revenue sports. So, for example, in the NHL, the Tampa Bay Lightning over the last several years have become one of the league's best teams every year. So absolutely with the Tampa Bay Lightning, which not too long ago got some private equity money.
Right.
That's an extremely well-run team, an extremely well organization. They've done some stuff right outside the arena as well. So in that type of instant, yes. But, you know, in general, no. I mean, the Cowboys are the most valuable sports team in the world. They sell more merchandise than any other team in the world. And what, they haven't played for the Lombardi Trophy since what, 95? I mean, so, you know, in some of these markets, no, in my opinion, it has more to do with your market. Again, going back to what Michael said about fandoms, some of these teams have built-in fans going back multiple generations, and then the business savvy of the owner.
What's your next number? 6.5, 6.
For what?
For the value of the Knicks based on your report.
Yeah, something like that.
Yeah.
Yeah.
I'll jump in here. I remember last year when I was here, I was working on a deal for an LP stake in the Knicks, and the deal transaction didn't come through. And I will tell you that the valuation was higher than 6.5 for the Knicks only. And Mr. Dolan and the team decided to not take the investment. So I think that bodes well for the bundle of assets in MSG Sports and for franchise value generally. I think you're going to see a print in the next 30 to 60 days of an NBA franchise that has a 7 as a enterprise value number.
Well, wow. We'll come back to that. Actually, as we've been talking here, headlines have crossed that apparently Jeff Lurie, who owns the Eagles, has put up is willing to sell a minority stake in that team for an 11 times revenue multiple, which would exceed the 10 times that were paid for the Commanders just a year ago. So we'll come back to that in a moment. But I do want to get to a few other questions.
Well, by the way,
yeah.
Chris, you point out a really interesting detail as it relates to what Mike's saying. The Commanders have been the laughing stock of the NFL for the 10 years prior to this transaction. Obviously, you're talking about the nation's capital, but you've never had an owner as vilified as Dan Snyder and an organization that sort of was perceived as poorly run as any in the NFL. The Eagles, on the flip side, have been an unbelievably successful franchise in almost every metric, on the field, off the field, and for their future, having, sort of a franchise quarterback who's young and still on his first contract, and leadership that, is poised for success. So one extra turn on the revenue, model doesn't seem so egregious to me on top of what was such a bad print for the Commanders.
Right. So one of our earlier presenters mentioned paddleball and pickleball. And, there's a lot of talk certainly about women's sports, particularly the WNBA of late. Any of these other non-Big Four sports, let's forget about soccer, well, include soccer, but F1 team, soccer, women's sports, others, going to move the needle, you think, in the U.S.?
I think definitely F1. I think it already has moved the needle. I think combat sports, obviously.
UFC.
Yeah. I think those are, again, because both of those sports are global, fan bases throughout the world. We were talking, I think, right before we started.
Both public companies, by the way, Formula One and TKO.
Michael meant, I have been skeptical on the valuations being paid for Major League Soccer teams. I don't get it. Like when we did our soccer valuations, you're looking at teams with, when Inter Milan was being taken over by Oak Tree because the owner had defaulted on some debt. You're talking about a multiple of, like, I don't even know if it was 4 times revenue for a team that had over $200 million in revenue. And yet you're seeing MLS teams supposedly change hands for 15 times revenue or more, and they have, like, I don't know, $40 million in revenue. So I don't, it's hard to understand.
I tend to agree with Mike on that. Formula One, TKO, I think they're blue chip assets. I don't think they're going anywhere. I do think that there's value opportunity in women's sports. I think they've floundered for 25, 30 years, and I do think we've crossed the Rubicon of a moment here with Caitlin Clark and Angel Reese and what we saw in last year's NCAA tournament, what we saw again in this year's NCAA tournament, and then what we've seen carry over since then with this opening of the WNBA season. I think that's spilling into women's soccer, believe it or not. I think it's spilling into women's ice hockey. And I think women's sports are an area of real growth. I'm shaky on MLS valuations broadly as well. But I do think that there are, and getting to Fidel and for pickleball, I think they're awesome from a participatory perspective. but I don't believe there's much business in the sports industry on a professional level for entities like ours on a commercial level. That doesn't mean that it's not fun to go out and play and that it will grow, because there were only, I don't know, 1,000 padel courts in North America, and that number is going to rise rapidly. But I don't think that I'm interested in tuning in to watch pickleball on TV, because I think it's not that compelling. And so I don't know if that answers the
No,
question.
that's helpful. And, you know, we're coming up. Oh, we're actually, we're rewinding the clock here. We were beyond the 2-minute warning, so we're going to go no huddle and end up the way we did last year, which is if I gave you unlimited funds to maximize returns on a 10-year hold, would you buy today the S&P 500? You can't buy a Gabelli fund, but would you buy the S&P 500, or would you buy a professional sports team in any of the leagues? And if you choose a team, which league and why? And the prices, we'll say, are the prices paid on last transaction, which is up on this slide.
Such a great question. Look, I think that I would buy an NFL team if I were going to buy a team. I just think that they are so far ahead of all the other leagues at this point and have such a favorable place in the mind of US-based avid sports consumers that it's the safest bet. I don't know that it's necessarily the highest growth opportunity, but I do think that, and I've shared this with a friend of mine who owned a piece of an NFL team and has a portfolio of other assets, that if he could pour more money into, and that was the Pittsburgh Steelers at that time, he should do it, because it's just not going anywhere but up. And I guess that's the way I would play it.
I would pick one not on that chart. I would take a crack at, you know, if we wanted to do a turnaround, just to offer a variety to the blue chip, the NFL, right? The flip side of that could be something like, let's say, I would invest in maybe Aston Villa, the English soccer team. Just, you know, English soccer teams could gain or lose a lot of revenue depending if they get booted from the top league and make it back. Aston Villa, just this past season, they've qualified for the Champions League, which is the most lucrative annual single sporting tournament in the world. They brought in this guy from that was running the Sixers for many years, Chris Hick, who's turned around the business side. They're getting a very big investment and presence in Egypt. They're a franchise that have totally turned around their business model. So, but there's more risk. But I think some of those lower level English soccer teams are intriguing.
Gotcha. Well, you know, I think when Sal was here last year, he picked the NHL. He went with the value play.
Blackhawks, I remember he picked.
Well, yeah. Well, he might be conflicted because I think he was the advisor on the Senators sale, but that's okay. I mean, the NFL clearly has the most valuable IP perhaps in the world. I would probably pick an NFL franchise, but those aren't available to pikers like us, to public market investors. But we do have the luxury of being able to buy the Atlanta Braves and the New York Rangers and the New York Knicks and via public company. And we as a firm actually are exploring ways to put together LP interests in different leagues. So there are going to be increasing opportunities to do that. We were working off the wrong clock, it turns out. So we actually do have some time, and I have some time for perhaps some questions from our audience. If anybody has them back there.
T20 is being co-hosted by United States along with West Indies, and it's relatively becoming very popular in United States. It's already very popular all over the world. To what extent you guys see the future of cricket in this country?
I think this is going to be a really important month to answer that question, and I'm glad you brought it up. I was going to get to it. I feel like if you are looking at it in a vacuum, you have arguably the third most popular sport in the world. And it is really almost not on anyone's radar in this country. This cricket T20 tournament is just started a few days ago, and will go on for the rest of the month. I'm not interested currently, but I'm aware and open-minded enough to know of the magnitude of cricket in one of the world's most populous countries of India, and therefore the same way I should have been and was open-minded about soccer 25 years ago, and the way I've sort of become a Formula One fan over the course of these last 5 to 10 years. I think cricket's got real upside.
One thing we didn't talk about this year yet is the NCAA and the future of the NCAA. Obviously, NILs has become a hot topic, unionization of players. How do you think that all unfolds? Does that impinge on the value or the revenue that the professional leagues get?
I think from what I've read and what that seems to be the legal arguments or legal things that have been settled, maybe the biggest issue from that will be Title IX. How do you factor that into everything? Where
Right.
the money's got to be split. So if the basketball or football team is bringing in, $100 million from NIL deals and being paid, does that now have to go to the women's archery team in an equal amount? I don't know. I just like I'm concerned about gambling. One of the things I'm concerned is, we've talked about the creative destruction, if you will, that's happening in the distribution of content. And I think we're going to see some of that as we move through college sports. I mean, college sports are basically moving towards being the minor leagues of professional sports. I think that's where it's headed. Is that a good thing or a bad thing? Well, maybe if you're one of the athletes, it could end up being a good thing. But at the end of the day, I think that differentiation actually created a lot of the appeal of college sports and created a lot of the value in college sports. So I'm not so confident that this ultimately will not hurt the appeal of college sports.
Look, I think college sports are incredibly compelling. I think beneath the NFL, the number one sport in this country is college football. So you have a really interesting moment here, and there's the sort of a convergence of complicating factors happening simultaneously. Conference realignment, the addition of name, image, and likeness, which really was meant to try and reward the highest, most visible players for the use of their IP and name and likeness. What it's become is an open free agency system and sort of a hodgepodge of 37 different state regulations that enable collectives and boosters to pay players to come. And then you add the transfer portal into the mix, which is really, I think, a problem that has forced college coaches to approach their jobs differently. And that's part of the reason that you see a Mike Krzyzewski or a Nick Saban head into retirement, when they can't put a kid on the bench without hearing him say the next day in the media that he's going to enter the portal and go to another school where his coach won't bench him. So a lot of different things at play. At the same time, I do believe that college football is really important in the landscape of American sports fans. And I think that it's going to continue to be, whether that, gets adjusted by the conferences who currently have power or private equity. You see there's a group that's led by Brian Rolap and Len Perna that's trying to sort of create a Premier League English football type approach to realignment of college football. We'll see. I think the NFL is behind that. I'm not sure that they are, but it makes sense because I think they want to control the calendar in the weekends in the winter. And as of this point, college football is the only threat to the NFL.
Remind me, as an agency, can you sign a college player now under the
Yes.
new rules? Yeah.
Yeah, we can actually sign a high school player. We've resisted going heavily into changing our business because of the NIL rules, because it really felt like a place where we could only lose. Our lawyers evaluated the 37 different state rules that were changing constantly, and as a company that tries to follow the rules, it just was more trouble than it's worth. So we're kind of taking the same tack we have always taken, try and identify players that we want to be in business with for the long haul. And in some instances, like we did with Bryce Young or Paolo Banchero or Cooper Flagg, who are at the top of the pyramid, we want to represent them a little earlier than we used to be able to.
Got it. And you mentioned earlier the CBAs. Just remind us. I guess what's up next? Is baseball the next CBA?
Yes, and I don't think any of the other leagues really have labor concerns. I think I'm worried about baseball, but I think Commissioner Manford, who has a career as a labor lawyer, has become a really effective commissioner. And I think he understands the power of partnership with the players. I think if you look back at the success of the NBA over the course of the last 30, 40 years, David Stern and Adam Silver did an incredible job of really embracing their players and making their players partners in the league. And I think Rob has worked hard these last 24 months to try and make himself more friendly to the players. And I think it's having an impact because there seems to be a little less animosity between labor and the commissioner's office.
Any other big revenue drivers or value drivers that we haven't talked about today? I know the sponsorship is certainly near and dear to your heart.
Yeah, I mean, look, what you're seeing is just a revenue mix. In the 70s, 80s, 90s, tickets was everything, right? That drove the revenue models. Then sponsorship sort of became a little more prominent. And then we said this media rights bubble of 20 or 30 years. We're starting to see that bubble contract on a local level while it stays strong on a national or global level. And you're seeing real estate and venue development become a piece to that puzzle. I think ticketing has made an emergence in the dynamic approach to pricing of tickets. You know, we used to basically price every game at the same price, and we all know that there are certain games that are driving value. So I think that has enabled teams to maximize their revenue, and I think they're going to continue to get smart with AI and other intelligent learning.
The hospitality side of the stadiums is going to be huge, you know, and you've seen like Real Madrid partnering with Legends and private equity for it's basically a new stadium. They call it a renovation. So the high-end hospitality, in a way, some of these U.S. teams are now sort of mirroring like what the F1 has done for decades, you know, in terms of high-end hospitality. So that's going to be, I think, Michael's talking about the revenue mix. I think that'll be a higher portion of that revenue mix going forward.
Right. And I had a slide, but I didn't actually include it in this deck of Major League Baseball attendance. And I think there is hope for baseball because baseball, actually, the attendance in aggregate is higher today than it was 20 years ago. Now you have two more teams.
It's a big iceberg, but
Yeah.
it is melting.
Yeah.
That's the problem. So I love baseball.
We specialize in melting ice cubes at this conference, actually.
Oh, is that right? Well, it's hot enough today.
Yeah. Okay. Any other closing thoughts?
No, I just to add what Michael said, I think the shortening of the game in baseball, I think it's only like 20 minutes or
Yeah.
something like that, but that's big.
Oh,
I think that's big. And it goes, when you're there, it goes faster. We just have to get him to a Yankee game. He's got the season tickets. You know, I don't know what.
No, the changes in baseball have been really transformative. The shift, the games are much more watchable, and I think that more changes will come to try and make it more compelling to viewers, and that's what we all have to do, make these adjustments.
I won't ask you if it's responsible for more pitcher injuries, but
I think that's probably fair. At this point, these baseball players, it's just a question of when or how many Tommy John surgeries they're going to have, not whether they're going to have it.
right, exactly. All right. Well, that was great. We really appreciate you again, and our best wishes go out to Sal. We'll miss him, but we'll hopefully see you all again next year. So thank you on behalf of everybody at Gabelli.
Thanks, Chris.
Thanks, Chris.
Thank you. So next up, we'll bring Hannah back for our session in a few moments with Nexstar.
Oh, yes.
We got one.